Good morning, good afternoon, good evening, wherever you are. I'm your host, FD for Sage5.tv with yet another weekly crypto markets updates that we bring you on a weekly basis. This is a segment where we cover things that are of interest to this channel that have happened during the previous week or the previous 7-day period, because we are trying to do it week in, week out. Before I proceed with this week's updates, guys, please note that this information contained in this video is not intended for UK audiences because the UK authorities are trying to protect you in case you invest your funds and you end up losing it all. You don't want that, do you? They are trying to be gatekeepers so you don't get to the crypto markets, obviously for the reason that you don't want to lose your money. They are protecting you for that reason. But if you're from the rest of the world, welcome to our channel. Before you proceed, guys, please note that the content in this video is not financial advice of any sort. If you do require any advice, please approach someone who's trained to do so. The information contained in this video is just for educational as well as entertainment purposes. Now that we've done some housekeeping, let's jump into this week's weekly crypto market updates. So the crypto markets are back where they were during the crash from the last week, and so many are panicking. I don't understand why. Bitcoin remains in consolidation mode, and in the short term, things may appear extremely bearish, but guys, this is all part of the cycle at play. In fact, looking at the Bitcoin cycles punctuated by drawdowns, what we've seen since the bottom around the 15,600 mark, nothing but moderate drawdowns have occurred so far, nothing of note. We haven't experienced any drawdowns since we moved from that bottom all the way to where we are today. We went up to 74k without any significant drawdown. Something is wrong. Now, there will be other things that we want to cover in this video that may explain as to why we've not had such drawdown that we used to experience in the past. It might have been man-made. Of course, it's a market, it's all man-made, but some of it was probably down to extreme manipulation. You never know. We'll try and walk into that as well. So to all those who are selling and panicking, it's best you leave the space now because we are about to enter a period of extreme volatility, meaning that we'll start experiencing double-digit daily upswings as well as retracements. You're talking of 25 to 40% up in a matter of hours, if not days, maybe 24 hours, and possibly at least up that. You're talking of maybe 30-40% in retracement in a single day. You are dealing with small amounts of cash within your portfolio, then that is within the realms of normal to an extent. But once you start dealing with retracements of tens of thousands, hundreds of thousands to millions in retracements, even these retracements, sometimes you feel them when you're dealing with large amounts. That is something that can shake even those hardened by the battlefield. Just trying to put things into perspective here. Not time to panic yet. This is all part and parcel of the cycle. Again, guys, not financial advice. This is how I see things. Anyway, in today's weekly updates, we are going to be looking into the following. We've got the state of the spot Bitcoin ETF as usual from the US. Who now holds what, and what's Michael Saylor and MicroStrategy been up to? What about BlackRock? How many Bitcoin do they now hold? Still on BlackRock, they are in the news about something else unrelated to the spot Bitcoin ETF. What is it? We're going to provide some cover on that as well. We also have some Ethereum related news, progress of the much awaited spot Ethereum ETF applications, along with the Ethereum Foundation's latest tribulation. The Ethereum Foundation is now in the SEC's crosshair. What's that all about? And we also feature this past week's crypto strong performance, and this week's lineup is a mixture of the usual suspects alongside some new entrants. At least for once, this list is not dominated by Solana, Render, or Pith Network. That's some lineup, right? Let's start with the spot Bitcoin ETF scene. So as of March 20th, 2024, BlackRock now holds 239,252 Bitcoin and appear to be making a run at Greyscale now. I honestly think Greyscale dropped the ball somehow. They should have thrown everything, including the kitchen sink, in their marketing efforts instead of coming across as arrogant Fs. Now, the chickens may be coming home to roost on their arrogance, of course. One of the most unreported fact that is starting to emerge, that is in addition to everything else, is that these new players joining the space are very sophisticated. Well, it's no news to if you watch our channel because we told you from the beginning they're coming for your lunch. And they are not coming for charitable causes. They are not coming here to pump your bags. They want to take your money. And Bitcoin is just a vehicle to do that. Looking at how market making seems to be evolving right in front of us, we may just about to say goodbye to the olden days of the centralized exchanges calling the shots, trading against their own customers in some cases, which seemed unethical, but they were doing it because they are regulated. And enter professional market makers whose sole tasks is to bring in those marginal buyers for as long as that is feasible. The future can only be better under the new market making regimes, if you ask me. I think they are going to bring some order to the space. And these centralized exchanges with the regulations and professional market makers, we may just be about to see something else. Anyway, the rest of the spot Bitcoin ETF scene is as follows. We've got Greyscale, who lost 28,207 Bitcoin in the past week. They now hold 355,759. We've got the BlackRock IBIT spot ETF. They now hold 239,252 Bitcoin, and they gained 15,606 Bitcoins, which I think some of them came from Greyscale. And then we have Fidelity, who gained 337 Bitcoin during the past 7 days, and they now own 135,697 Bitcoin. Then you've got AIOZ, who now have 40,000 Bitcoin, and they gained, that's good performance. They gained, in the past 7 days, they gained 1,325 Bitcoin. You've got Bitwise, they now have 30,035 Bitcoin. They gained 1,063 Bitcoin over the past 7 days. Vanek, they now have 7,776 Bitcoin. They gained 704 Bitcoin during the past 7 days. Valkyrie, they now have 6,530 Bitcoin, and they gained 204 Bitcoin over the past 7 days. Vesco Galaxy, they now have 4,804 Bitcoin. They actually lost 77.5 Bitcoin over the past 7 days, and the previous day, which was the 19th, they actually lost quite a bit. They lost 667 Bitcoin. Then you got Franklin and Templeton. They now have 3,457 Bitcoin, and they actually gained 396 Bitcoin during the past 7 days, but on a single day, which was the previous day, before the 20th, they lost 39 Bitcoin. And finally, Wisdom Tree, who are anchoring the bottom, they now have 1,082 Bitcoin, and they gained 57 Bitcoin over the past 7 days. But on the 19th of March, they lost 108 Bitcoin. So as you can see, the picture is actually solidifying in front of us. You can see Greyscale, they keep bleeding Bitcoin, and BlackRock's IBIT is gaining, as well as Fidelity. And ARK Invest seem to be joining the party alongside with Bitwise. The rest, I think, is just a fight for survival. But those top four, Greyscale will be joining the fight for survival very soon, because I think they got arrogant. Some of the prices in crypto, it all comes down to fees. But some of the pricing in crypto, for anything crypto, some of the pricing is detached from reality. And that includes Greyscale's fees as well. It was just arrogant. Should have done something about it and throw the kitchen sink and consolidate your position. Instead of thinking, oh, we'll lose some, but we'll keep majority. Now, that figure, I'll not be surprised throughout April if that figure is below 200,000. It's quite possible. And they'll all be under BlackRock and Fidelity's control. Let's wait and see. That is the state of affairs as far as the spot Bitcoin ETFs are concerned. In other news, BlackRock related, BlackRock made a strategic investment in asset tokenization company Securitize. The leading global asset management giant, BlackRock, officially unveiled its tokenized asset fund on the Ethereum network on Wednesday, the 21st of March 2023. The BlackRock USD Institutional Digital Liquidity Fund is represented by blockchain-based BUIDL token. It's fully backed by cash, US Treasury bills, and purchase agreements, and will provide yield paid out via blockchain rails every day to token holders. Now, it's a token. If it ever finds its way to, say, Coinbase, people will be exposed to BlackRock's tokenization asset or token. That is going to be earth-shattering if that becomes mainstream. At the moment, I suppose it's only through traditional providers. Securitize will act as a transfer agent and tokenization platform, while BNY Mellon is the custodian of the fund's asset, BlackRock side. Anchorage Digital Bank, NA, BitGo, Coinbase, and Fireblocks also participate in the fund's ecosystem, like I thought. Coinbase. It is also important to note that BlackRock is the latest traditional finance giant to enter the tokenization field after Citi, Franklin and Templeton, and JP Morgan, who have already made headways within the technology. Creating blockchain-based tokens of traditional investments such as bonds and funds, known as tokenization of real-world assets or RWAs, is a fast-growing use case for blockchain technologies as digital assets and traditional finance are becoming more intertwined. Now we move on to Ethereum-related news. Just like the Bitcoin, some major US-based asset managers and investment funds have also applied for a spot Ethereum ETF in the US, and so far the list of applicants is shorter than that of Bitcoin prior to grant. There are some circulating rumors that the ETH spot ETF is not going to be approved by the upcoming deadline of May, and this is mainly due to this Security Exchange Commission stance when it comes to Ethereum. While Ethereum is viewed by many as an inferior proposition versus Bitcoin, I actually beg to differ. I think Ethereum will actually have more to offer when it comes to spot ETFs. One of them being that an investor will likely earn staking rewards while also dealing in an appreciating asset. And it's a network. It's adding value all the time. Anyway, just my thoughts, guys. I believe we don't have long to wait before we can actually start comparing these two alongside each other at some point soon. In other Ethereum-related news, the Ethereum Foundation finds itself in the SEC's crosshairs. Could it be that Gary Gensler and crew are just trying to keep the rest of the crypto ecosystem away from TradFi? Because we are coming for their lunch now. We are coming to disrupt them. It certainly looks so, and if that is the case, personally, I think the end result is inevitable. It's coming, whether they like it or not, to pick them up, kicking and screaming, and show them the door if they don't want to stay around. But we are coming for their lunch now. And now on to some big performers over the past 7 days. You got Fantom. The FTM token rose from around 75 cents to well over $1.15, an increase of at least 55 cents over the weekly reporting period, which is just epic if you ask me. I hold the Fantom token in my private portfolio and I cannot be any happier, if I'm to be frank. We also have AIOZ, another new entrant to feature within the weekly crypto markets updates. AIOZ rose by about 22% over a 7-day period. Then you have Jupiter or Jupiter Exchange. While Solana's Sol token isn't among this week's strong performers, one of its leading ecosystem projects does feature in this week's update, and we are talking of Jupiter's Jup token, Jupiter Exchange's Jup token, another airdrop I was very lucky to get following a string of steps, which now appear like it was a genius move, but nothing of that sort. I didn't plan anything, but the Jup token rose by about 25% to over $1.50 before retracing down to the $1.10 to $1.20 range at the time of recording. We also have Sui. I've got some opinions on Sui. If I put my feelings towards how the Sui team handled their airdrop, this is one project that could have grown into a massive project if the initial enthusiasm had just been tapped into. But the Sui team messed up big time. There was a community, a ready community they made or helped create, messed things up when it came to the airdrops. Far from airdrop farming, most of us were just happy to get involved in a layer 1 than the established layer 1s that had already gone beyond the reach of many in terms of their coin prices. The Sui token rose by about 26 cents from $1.40 to just under $1.90 in a 7-day period. Next, we've got Stacks. This is a Bitcoin Layer 2 scaling solution. This one is coming through as the leading Bitcoin Layer 2 scaling solution. Therefore, it is no surprise that it saw price increases from just above $2.50 to about $3.70, which is an increase of about 24% over a 7-day period. This one certainly has more to run as long as Bitcoin keeps going upwards. And finally, we've got Aptos, a direct competitor to the likes of Sui and possibly Solana. The Aptos token saw an increase of around 22% over a 7-day period, slowly approaching its previous all-time high at around $20. So the Aptos token is doing quite well. I think at this moment in time, it's around $15.70 or somewhere thereabouts. So it's doing quite well. So guys, that's your load for the week. What are your thoughts as far as this week's update is concerned? Let us know in the comment section. Until the next one, I'm your host, FD for Sage5.tv, signing out for now. Bye.